In principle can help you speed up the process because it gives you an indication as to the likelihood of you being able to borrow money. But what is a mortgage in principle and how does it work? A mortgage in principle is interchangeable with decision in principle. You've maybe heard that, or agreement in principle as well. You've maybe heard that terminology. It all means the same thing. They all provide you with evidence that a lender has had a look at your credit and made an informal judgment on whether or not they will lend you money. Typically speaking, estate agents and builders can often request that you've got the agreement in principle. Certainly, if you're buying a new build, you will be expected to have the agreement in principle before you reserve, because when you reserve a property, you put down a down payment. Estate agents can be a bit more flexible, but it's always a good idea to get your agreement in principle before putting in any offers. One of the key things when it comes to agreement and principles is the type of checks that it's going to do. It's not as intrusive as a full check, but sometimes some of the lenders can do what's known as a hard check. And there's two different types. You've got your soft footprint or your soft check, and you've also got your hard check. Now, the difference between these two checks, the soft check is where a lender will just quickly go in, have a quick look at what's going on, make sure that you're going to be able to afford the mortgage through their affordability checks, make sure that the credit's okay, and then they'll come back and make a decision on it. This doesn't leave any real footprints on it. Nobody else other than you or anyone reviewing your credit report will know that it's been done. So if you do need to go to another lender, they won't know that you've actually applied for it. A hard check is a little bit different. So a hard check is when a lender does the full credit check. They'll go look into the credit report in detail. They'll let everybody know that they're checking it. And these kind of things can also impact your credit score. It's important to know that there's no one that I've ever came across that's been declined for a mortgage because they've applied for a mortgage. That just doesn't happen. But having a hard check on your file can certainly impact your score. Now, some of the key things to understand with the mortgage in principle or the agreement in principle is that the scoring process can be different and it can change after the full application goes into a lender. I'll give you an example. There's one lender out there in particular that when they do their credit checks, they'll do there's more than one, but they'll only check one of the agencies. But when they actually go to do a full credit scoring application, they'll check them all. And when that happens, that can change the decision from the decision in principle to actually getting the mortgage offer. It's key to understand that when you are doing these things, it's important to know that this could happen. And the mortgage in principle isn't a guarantee that you're going to be able to borrow money. However, it is certainly a really good indication. Now, I hope you find this useful. And if you do have any other questions, please feel free to fire them over.